Hey everybody, how's it going? JT here along with the EVMavericks and Ethfinance on Reddit. Super glad to have you join in again for this edition. Happy hour number 20. We've got Rhett Shipp on the Zoom call from Gravita Protocol. Welcome to the show.
Thank you. Glad to be here.
So on behalf of the Ethfinance community and Reddit, we are ready to rock and roll. Give us a thumbs up on the YouTube channel. Make sure you smash the bell if you haven't done it already. Today we are going to be covering GravitaProtocol.com. Gravita is an open source protocol that allows borrowing assets interest-free using liquid staking tokens as collateral. So we're so glad that Rhett could join us. But before we talk to Rhett, we are going to go into our show opener and get on with the Trinity and all those good things. The weekly Doots live stream is all about showcasing the best of the week from the Ethfinance community on Reddit. This is a read-along reaction series, and if you want to follow along, head to dailydoots.com. And this is designed and produced by Hani Abu. And while you're at it, go grab today's POAP. Thanks to Tricky Troll for capturing and curating each day's Doots. And, of course, the Owl Word for curating the beloved weekly list. As always, if you know somebody who would want to join in with us, we'd sure love to have them. Just send them my way, and away we go. All right, so we're going to go right into the morning trinity at dailydoots.com. Vinegar Strokes clocks in Ethereum. Needler OP checking in on a price of $1,805 and 696 underscore ETH reaches a ratio at 0.068. The weekly Haiku by JS Tears. How does he do it every day of the week? Tax crypto traders, the debt ceiling breakers, rug pulling raiders. Very good. Thank you so much. Looks like we got a Q update here. Q update. Your daily beacon chain dose, pending validators joining 72,000 with zero leaving. The entry queue is up 2,300 from yesterday's number. It will take just over 36 days for the entry queue to clear. In around 2.5 days, the amount of daily validators that can both enter or exit will be increased from 1,800 to 2,025. These figures are based on the entry and exit queue at the time of posting. Thank you for that information, SpaceSider. SpaceSider is actually an R cryptocurrency moderator. We're super glad that he's a maverick and right here on Ethfinance. All right. We've got 2 ship posts of the week. I picked one of them because I was laughing so hard at it. But the original ship post of the week, the real first one, and you know we got to do the ship post first because we always like to save the best for first. And then goes to Someday It's Dark. It wouldn't take much volume from Fidelity to cancel out the checks notes negative ETH issuance. It wouldn't take much volume, would it? And then the shitpost of the week that I found today, I have to open this up a little bit. This is hilarious. So Ethereum is the only digital asset in the world that is all of the below. And there's a bullet list: decentralized, productive, secure, useful, immutable, permissionless, and trustless. And then we had a user come in and said, let's rearrange those words into a catchy acronym. Secure, trustless, useful, permissionless, productive, immutable, and decentralized. In other words, ETH is stupid. I love that.
I read the first sentence of that, come up with an acronym, and I was looking at it, and in like a second, I came up with the same deduction.
Did you see my reply on that? You can't see this on Discord, but if you go to the link, I put, the meme where you got the guy that's like, he's got the girl, he's biting into his metal, he's double birding the camera guy, he's popping the champagne, he's in third place when they zoom out. Anyway, I just this one made me chuckle out loud for sure. So, excellent job all the way around. Super proud of all the quality ship posting that we get in our community on a very consistent basis. All right. I think with that, it is time to introduce Rhett Shipp once again from Gravita Protocol. We are so happy that you could carve out some special time today for the Mavericks. And I think the easiest way to lead off is just, if you want to just, how did you find us? That would be a great way to lead off. Is, you know, we're such a niche community within the Ethereum ecosystem. So give us a little bit of background on how you found us, because that's a pretty cool story.
Oh, yeah. Thanks. Glad to be here. I don't follow Reddit quite as closely, and I wish I did because I've heard good things about Ethfinance. But on Twitter, I just noticed, this was probably a year ago almost, a lot of people with Lion PFPs were giving really good Twitter commentary. And I'm like, I ended up tweeting out and said, hey, I found that if I follow a Lion, you're always getting basically good, solid takes. So kind of discovered you guys just on Twitter. Like I said, just found that the Lions all seem to be pretty insightful, had really good crypto takes. And it turns out actually one of the team members of Gravita is a Maverick as well. Munchkiner, if you guys see him around on Twitter or in here probably as well.
Fantastic. So it's always nice that, and you're not the first person that has said that. They were like, what are these Line PFPs? Because they do have good things to say on Twitter. It's like, yeah, we got to, I will say there are so many community members on Reddit that only use Reddit for that sub. Like, they don't use Reddit for anything else because it'll just, it's like doom scrolling. Reddit just has the algorithm that just pisses you off too. So they just specifically use Reddit for Ethfinance, and that's such a huge honor because I think the long tail conversation you can get there that's very focused within a walled garden. It would be good for Gravita from time to time just to dip in on the daily if you have updates or whatever. You may find that on one hand, you're attracting new users, but on the other hand, it's a really good community for giving feedback and bugs. And I mean, we got so many intelligent people here that it's a mutual beneficial thing. So can you go into Gravita now and give us kind of a high level concept of what it does? And I'm going to actually share, I'm going to share my screen so they'll see the website while you're talking. Go ahead.
Yeah, sounds great. And yeah, maybe you'll convert me to be a Reddit user. It was crypto that got me to be a Twitter user as well. I was not until. But yeah, high level, Gravita is seeking to be the most Ethereum aligned lending protocol at a very high level. One of the things that we're doing to that end is trying to help facilitate utility and fuel for growth for high quality minority LSTs and high quality LSTs in general. And what we are is we're a multi-collateral friendly liquidity fork. So if you're familiar with liquidity, the mechanisms are very similar. So you mint our debt token, GRI, which is similar to LUSD and liquidity as a form of borrowing. You pay a one-time 0.5% mint fee and no interest, just like liquidity. One difference there is that mint fee is pro rata refunded if you close in less than 6 months. Without getting into too many details, liquidity is a really good place to borrow for long term, but not so great for short. And we feel like we need to be a good place for both types of users. And so, yeah, it's a lending protocol that accepts multiple collateral types and is very focused on liquid staking tokens. We take ETH. We take ReptST, ETH, RETH, and BLUSD as a special case. That's one of the ways that we're friendly to liquidity right now. And then we'll be onboarding new liquid stake tokens, and then also soon liquid stake LP positions, like an RETH, ETH LP position as collateral. And then further down the line, we want to bring a lot of utility to node operators as well. And so we're exploring different possibilities for node operator loans, et cetera.
So what is like your history in the space as far as building products? What other teams have you worked for? Maybe a little background of the team in general on Gravita. Let our users know what audits you've performed or anything like that.
Yeah, would be happy to share. So I have this is the first protocol that I have built. Prior to going into crypto full time, I was a data scientist building an AI product for several years. Was too obsessed with DeFi to stay away. And when I first came into DeFi, I was more on the asset management side. So I've done professional asset management, earning yield on stable coins for funds and things like that, and doing things what I call like DeFi as a service as well. Um, and saw a need here. I felt like there's some really important utility that we could bring to the LSTs, and decided to jump in and start building this with a team. We started building last year and launched just a few weeks ago. On the team, so I mentioned one of the smart contract devs is a Maverick. That's Munchkiner, also known as Geo. Fornax is our lead on smart contracts, also known as Dante is his real name. And he has led at some other protocols before coming to us. He was the lead at it was an NFT marketplace that they were building. And he's actually also been a pretty big contributor, not an official part of the team, but has contributed a lot of code to Rocket Pool. And we're lucky to have, well, all of them, but we're lucky to have him because Rocket Pool wanted to hire him full time, and he was kind enough to stay with us instead. And on front end, we have a guy named C. Cleaver, Corey, who leads their long time kind of fintech builder before coming more into crypto. Lots of others helping out, but I just thought I'd highlight a few.
Sure.
Our other main smart contract dev is Spider, is his name, and he's been in the space for a long time. He and Fornax have worked pretty closely together. They're both Brazilian, actually. And on the audit side, for V1 we did 3 audits. One with DDoB, one with Omniscia, and then after we finished those 2 kind of traditional audits, we did an audit competition through Hats. There's a number of things we're trying to do to be kind of as safety oriented as possible. So we did the 3 audits. We started with a really battle tested code base, which was Liquidity. And then we're also rate limiting. You'll notice that we have pretty conservative mint caps on our collateral types that we raise a few days after they fill, just trying to approach this from the safest way that we possibly can.
Excellent. I was going to open up the room if anybody in the peanut gallery has any questions. I'd love to hear if there's anything that you'd like to ask Rhett before we move on to our daily Doots.
Okay. I see one in the chat that asked if there's any plans to release on L2s. And the answer to that is yes. We feel like, like I said, we're trying to be as Ethereum aligned as possible. And as part of that, we feel like we'll be a better steward of the Ethereum blockchain if we can help attract up, DeFi activity to the L2s. So that is a very high priority thing for us. I don't have exact timelines for you yet, but we plan to deploy onto all of the high quality L2s as soon as we can.
Jurisdictionally speaking, are you guys based in a particular country or region? And have
good
regulations played anything into your business models moving forward? Just curious where you're at on that front.
Yeah, that's a great question. So the team is really dispersed. I'm in the U.S. We have 2 guys in Brazil. We have multiple people in Switzerland, 1 in Canada, and then there's some of the kind of part-time contributors are in the U.S. as well. But most of the team is outside of the U.S. and very geographically dispersed. We do have a legal entity that's it's pretty standard for crypto. It's a Cayman Foundation that we did not launch initially with a token, but when we do, it'll be issued by that by the Cayman Foundation, and then underneath it has a BVI entity. That's kind of standard these days for crypto organizations, legally speaking. So that's kind of where we're like officially headquartered, and like I said, the team is all over the world. So yeah, I see there is another comment in the chat about liquidity and audits. If you want me to jump to that
go
one,
for it.
JT.
Yeah. So,
The
by the way,
question is, go
Ether
ahead.
I was going to say Ether Raider, by the way, is he's like the guy that was the original artist for the EVMavericks lines that you see.
Oh, that's awesome.
Yeah.
Love what you did, Etherator. That's awesome. So he said with liquidity already audited, what are the additional components that needed to be audited, or the ones that are higher risk for Gravita? So good question. Briefly, our main divergences from liquidity are we went from single collateral to multi, and we liquidate through a stability pool just like liquidity does, but it's a single stability pool for all the collateral types. So if you deposit GRI into the stability pool, anyone who is liquidated, your GRI is pro rata burned and you capture their collateral pro rata, but that, includes, ETH borrowers, RETH borrowers, ST-ETH borrowers, et cetera. So that component was important to, observe closely on the audit side of the multi-collateral and how it works with the stability pool. And then one of the other key pieces where we diverged from liquidity that needed to be looked at pretty closely was our fee model change. So like I said, liquidity charges an upfront fee, end of story. We charge an upfront fee, same, but with a couple of differences. Liquidity's defaults to 0.5%, but if there's a lot of recent borrowing, it'll increase along a curve. Ours is at a fixed 0.5%. And then if you close in less than 6 months, you get a pro rata rebate you pay a minimum of 1 week's worth of that borrow. But that fee model change was one of the key divergences that we needed to look at as well on the audit side.
Fantastic. Anybody else have any questions before we move forward? Hani Abu, hit it. I could see you unmuted.
Yeah, I'm a little confused because you say that there is a fee, but it's interest free. I mean, naturally, so it's not fee free. It's just no ongoing payments. Is that correct?
Yeah. So this is how liquidity frames it too. So sorry for the confusion. What you might say is there's a loan origination fee, but no interest rate, if that makes sense. So like similar to when you buy a home, you have an interest rate and then you pay some loan origination fee. We have that. We have the upfront fee, but no ongoing interest rate. I can take that as feedback of maybe we can be a little bit more clear about that.
I mean, it's good marketing. It's a way to sound appealing while misleading.
We're trying to be clear, not misleading. So my personal view is that the best marketing is clear and appealing. So I'll take that feedback. Appreciate it.
I appreciate the explanation.
All right. Anybody else? All right. Thank you. Hope you can stick around because now it's time to go right into the Daily Doots. And I'm looking over on the sidebar in Discord, and I do not see any of our headline readers. So I'm going to go solo unless somebody wants to step up and just read the headlines. But if you open up dailydoots.com, we're going to go right down to Crypt Owl Wow Currency explains why you shouldn't burn your scam NFTs. And imagine an Ethereum spam token as a small piece of land in the middle of the desert that has a big sign planted in it saying, Barthib owns this. You have no idea who put the sign there, and the land was obviously worthless. So why would you bother driving out into the desert to try and claim it or take down the sign? The TLDR is hide it. Don't interact with it or try to, quote, get rid of it. Conceptually speaking, Ethereum tokens, including NFTs, don't exist in your address like ETH does. They exist in their own token contract that maintains its own separate ledger. This contract's code is determined entirely by the creator of the NFT. When your wallet software checks your address for tokens, what it's basically doing through a couple levels of interaction is pinging the smart contract that the token creator published, asking it, does this address own any of your token? If so, which one or ones does it own? The token's creator can, if they wish, tell the contract to respond to this inquiry with literally anything. They could tell your wallet that you own an amount of their token equal to the current block number, or randomize every day the tokens the contract says you own if they wanted to. When you interact with a token, your wallet is reaching out to the token contract and running the code defined there by the creator of the token, which can also be anything they want. So a situation like this could occur. You try to send the token to the null address. By doing so, your wallet calls the transfer function on that random token contract. The transfer function is malicious and tries to trick you into sending the attacker other tokens out of your wallet, or even just fails your transaction, causing you to lose your gas fee. So there's an edit here as well, but I'm not going to go on with that. I was going to see if anybody else had any broad comments on this idea of just hiding your NFTs rather than trying to get rid of them. All right, we'll move on.
Yeah, I mean,
Hanny,
things
hit
like
it.
a lot of platforms hide these types of NFTs anyways. So, I mean,
We're getting better.
there's not really a need to touch them either way. But yeah, there's definitely risks in moving them.
All right. So that, I think the space is maturing a little bit. We're starting to see the equivalent of this thing called a spam folder enter in the NFT marketplaces from the sounds of it. So that's good.
Yeah, exactly.
Awesome. All right, moving on down the list. JPM shares an update from Japan. I've been away in Japan the last 4.5 weeks or so for vacation. Jeez, man, 4.5 weeks. Awesome. Didn't use the phone much. Went camping, did jiu-jitsu, was a corner man for an MMA fighter, went to a baseball game, sumo, just reconnecting and seeing how the ecosystem is here. Japan just hosted the G7 summit in Niigata, Japan, where the topic of cryptographic commodities was brought up. There seems to be a $3,000 USD threshold put on commodities, so anything above that amount is reported by the exchange or the bank. It seems a bit low relative to what hedge funds do. Fun fact, I've spent some time with some cryptographic security people here in Tokyo, and I've been informed that something like 33% of all crypto theft occurs to Japanese people. Sure enough, here's an article with some of those details, and you can see that at dailydoots.com. I'm sure you've all heard about the recent Tornado Cash protocol takeover, hoping anyone here affected is all right. Anyway, so I love you all. Keep being ambassadors and keep helping any and everyone who asks for it. So JPM, thanks for the update from Japan. That's a beautiful country I'd love to visit someday. Anybody in here been to Japan before?
Never, but would love to.
Yeah, I want to go to Osaka. I've heard that's a really good food town, and my muffin tops and my hips don't lie. I like to eat, so.
If food's the best part of traveling.
Man, yeah, Japan is just an amazing culture and country altogether. All right, we're gonna move on down. I love this username. Usernames on Reddit always crack me up. Frank the Tank shares a PSA for Google Authenticator users. Yes, I've read this. This is important. If you guys are using Google Authenticator, I think this is related to their update. I remember reading this. Heads up for everyone using Google Authenticator two-factor authentication app. While this might be old news, the update was pushed around the end of April, so this was new to me. So maybe some fellow ETH financiers might find this useful. This morning, I opened up my Google Authenticator app to find out that it needed an update. The update included a backup of the Authenticator codes into my Google account. When I explored this a bit, I found this, quote, "With this update, we're rolling out a solution to this problem, making one-time codes more durable by storing them safely in a user's Google account. This change means users are better protected from lockout, and that services can rely on users retaining access, increasing both convenience and security," end quote. That's from Google. Really? How can they think this is safe? The whole point is to have a second step besides your standard login option like Gmail. What's the point of storing your two-factor codes in a Google account that when it gets compromised, your two-factor codes are compromised as well? There is the option to keep using the authenticator without the backup feature. Remember, when it comes to online security, the ultimate responsibility lies with none other than ourselves. Stay vigilant, take proactive measures, and empower yourself to safeguard your digital presence. I was like, I updated my Google Authenticator app, and I saw that notification, and they had light gray text on a black background to not do that feature. Why in the hell?
Oh, that's dirty.
Why in the hell are they wanting to offer that as a feature? I mean, this is not, the early 2000s.
Well, I think the same issue is, it's the same problem with Ledger is they're trying to cater to the lowest denominator. And people are horrible with remembering passwords.
Yeah,
and
it sounds like
they
the
don't care
American
about
education
security
system.
So they'd very much rather have Google store their sensitive keys simply because they just don't care about security anyways, and they're just oblivious to the risks.
I just don't get it.
It is frustrating.
It's frustrating that at the same time you know what they should do? They should do like a stoplight. Here's the red stoplight. If you really want to do it, you could back it up to your Gmail account. The yellow light is do nothing at all, and the green light is set up a dummy phone and copy those codes over to a device that never connects to a cell network or something.
Yeah, I think the problem is that,
and they could sell that device.
I was reading something about this where people are just upset that they're losing their keys. So if you warn them against, doing this, and it kind of defeats the whole purpose of doing it anyways. So the whole reason they're doing this is to help all those people that are losing their keys. So you don't want to do this for them and then try and dissuade them from doing it.
Yeah. My heart hurts because it's just gonna. Now it's like they got your authenticator codes and your email address too.
Yeah. These days, if your email gets hacked, you're pretty screwed. Everything's attached to email now.
Everything. Yes. I don't know how we get out of this damn hole that we're in, especially with AI coming in, sniffing around. Oh shit! Yeah,
it'd be great if we got more technically savvy government tools for this. Something just as simple as adopting the private key public address systems for stuff like that would be great. But we're stuck with social security numbers that are fixed. And fun fact, you can't even preemptively update your social security number. You have to wait until something goes wrong to be able to change it, which is ridiculous.
That's I don't know how we're gonna fix this stuff. Anybody else want to chime in on that before we move on? All right. Very good. Moving on. Paul Brody wrote a book about Ethereum. Hi, everyone. I just got the final cover for my book back. I've written a little book about Ethereum, specifically about why Ethereum is the future of business. It's called, no surprise, Ethereum for Business. If you would like to pre-order it, the paper copy should be in your hands in about 2 weeks, as we're nicely ahead of the official schedule, and orders for ebooks on Amazon or Apple will follow in another 2 to 3 weeks. I'll do a top-level post on why I wrote the book and what it's about on the official release day. So shout out to Paul Brody for writing a book. He's contributed to other books. They are publishing it through the University of Arkansas Press. Just as an aside, the University of Arkansas has the Walton School of Business. If you think, Walmart, Sam Walton, the Walton School of Business has a blockchain division within the university structure. And it's ran by a lady by the name of Mary Lassity. And so it's no surprise that Paul is having the University of Arkansas do it. And I should note, I think he mentions Ethfinance in the book. I haven't got a copy yet. I purchased 2 of them, but he was saying at some level there's some mentions of Ethfinance in there, or I don't know what the deal is on that, but hats off to him. And I think most of the proceeds of the book are going to public goods. I'd have to look it up. Maybe somebody could look it up and put it in the chat, but I believe he said somewhere about public goods being the beneficiary of the proceeds for this publication. So congrats to Paul Brody. If anybody in the audience doesn't know who he is, he's the global blockchain lead for Ernst & Young. And I got a hat that says London on it because I got to go to the conference. It was dope. I haven't made a video about my experience yet because I'm really, really, really busy at the moment. But it was really nice to visit Paul in London and hang out with the EY crew. There's one of the guys from EY I want to get on, James Canterbury. He's a supply chain specialist for working for Paul. And he's a big doomer when it comes to AI. And I would love just to have him come in and throw some punches around with us. He said he'd love to join us sometime. Super sweet guy. We got freaking smashed. We were walking around London at like 2 a.m. Like it was fun. We had a great time. But anyway, that's it. Paul Brody, good job. Anybody want to say anything on that? Oh, I see Tuesdays is in the chat. Tuesdays, Gravita protocol. I have Rhett Shipp here, the founder. I think the Palisades crew would like their product to at least take a look at it. Gravita protocol, gravitaprotocol.com. Rhett Shipp, if you want to DM him and friend him up, bring him over to Palisades. I'm sure he can make some time for you guys over there. All right. Moving down the list, Juxta, another position, has an EVMavericks ODAO update. By the way, Rhett, the Mavericks have been kind of slated to possibly be a part of the Rocket Pool ODAO. So that'll be kind of fun. There was a meeting planned for Monday, but too many people could not make it last minute. A few of us had an unstructured discussion, mostly about the costs of setting up and running an ODAO node and necessary archive node. User Harog calculated some of the cost using on-chain activity, is willing to share a doc once complete. And here's another great resource. That link is at dailydoots.com. We'd like to maximize participation for those interested in working on the project, so please enter your availability for the next meeting. So if anybody wants to join in on that. Discord.
Has there been a conclusion yet?
I don't know. Hopefully somebody in here could say if they're intimate with what's going on.
Keith Rader, do you know? If there's a date yet for this?
He just DM'd me. He says, I'm in the bathroom on the toilet. I can't answer right now. True story. Yeah, we'll need to stay on top of that. All right. Very good. We'll move on. Logri the Bard. Man, weekly. Dude's killer. Logri the Bard thinks now is a good time to familiarize yourself with Curve. By the way, Rhett, Logri the Bard he's a resident DeFi expert. He runs tokenomicsexplained.com. So he writes, with Curve USD finally launching in earnest now, let me switch my view here. Now, in earnest, now would be a good time to at least familiarize yourself with the Curve ecosystem if you haven't. It's still the second highest volume DEX and might have just launched a way to double its income. There's a lot to unpack here. Curve issuance, how much is being admitted? When are the scheduled emission reductions? Who is sucking it up? Bribes. This is basically a way of reallocating liquidity from a trading fee optimal allocation to a curve holder revenue optimal allocation. This takes a bit to get your head around, you think? Curve version 2 pools, these are largely misunderstood. Unlike Uniswap or Balancer, Curve V2 pools have a volatility instrument in there that flexes liquidity depth to minimize, was it impermanent loss, IL, and adjust the target peg over time. This is a seriously undermarketed feature. And then CRV USD, a new CDP-style stablecoin that uses a gradual liquidation system so you get less wrecked. Lower risk for borrowers, no need for keepers to liquidate you, and it enables high LTV ratios. This is my favorite DAI style replacement so far. LUSD puts your collateral at risk even pre-liquidation. RAI famously isn't stable. CRV USD is just an improved design of the liquidation system, and the peg can be backed by the entire DEX revenue for a stronger coupon bond failsafe than DAI could ever offer. I do suggest you spend a few hours and familiarize with this system if you haven't, because it is the baseline so many other projects derive their tokenomics from. And I see we have Logri in the audience here, and anybody else that wants to comment on that.
Yeah, I mean, if you're able to answer, I don't know if he's around. Okay, he is.
Yeah, I'm here.
He's out of the bathroom.
The V2 liquidity management tool, is that expensive? Because I imagine it would cost a lot of gas, or is it somehow gasless?
You mean the Curve USD liquidity management system?
Yeah, where it'll change the...
Yeah, so it's an AMM. So the assets you're putting on there are literally joining the pool with the rest of the assets that are being traded. You're just in a counter trade position. So the people that are trading on Curve, just like average traders, are paying the gas transaction fees to gradually liquidate and unliquidate you. It's just that rather than having big chunky liquidations of like 10% of your collateral at a time, and then having to pay them an extra 2 or 3% to serve as a keeper, everyone trading all the time, just your average everyday arbitrage, you're technically collecting trading fees. You're literally getting paid for them to liquidate and unliquidate you. And they're paying all the gas to do it.
That's like the rocket pool method of using the other person's transaction to cover it.
Exactly. Yeah, that's a good analogy.
So one of the ways that I think about this, and I think there's some great things about this system, is that it's similar to if Liquidity just took LP collateral, where you had like ETH LUSD as collateral. You kind of take advantage of like the collateral itself has baked in trade fees, obviously, but you kind of take advantage of the IL, which makes liquidation, you could call it more gradual or lower probability.
I think
there's great things about it, but it gives us some upside.
It's not just the standard Curve LP though, right? So the standard Curve LP says that you're going to buy the more underperforming asset, right? So as the price of ETH drops, you're going to buy more ETH. As the price of ETH rises, you're going to sell more ETH. That's your standard Uniswap V3 and Curve LP style thing. This is actually counter trading. So as the price goes down, you're actually selling your ETH into USD, which basically is making you less exposed, right? And that's how if it goes back up, you're able to recover. So it's not just a standard Curve LP; it's an inversion of that, right? And that is still added to the liquidity books for the Curve AMM, which is quite a clever thing to do. Basically, they have like Curve 1 subtracted from Curve 2, if you think of it that way, right? And they do it in like 5 different line segments. Like there's some complicated math. The white paper is not easy to understand. Took me a few passes, but conceptually, what's happening is very simple. They are counter trading from what the LPs would normally be doing. Your stuff is included in the sum curve of the system, and you are being gradually liquidated so that there isn't any need for a keeper or a big chunky system. And in the simulations that they had, all the major like black swan events, which liquidated all the major maker holders, the Curve USD holders would have lost a few percentage, like 1 or 2% for like the 2020 crash, which is an impressive delta by simulation, right? The net result is just something that's safer and more fee efficient. But also, they can do things like Frax can do on the central banking-esque style management, right? So if Curve USD is over the peg, they can not only lower the interest rates, but potentially the Curve could create something like the AMO system that Frax or Alchemix have, that would mint the Curve USD asset and sell it at market, right? For something, maybe Curve tokens, right? And vice versa. So if there is a treasury of assets built up by Curve, they could use that to buy back, not only raise the interest rates on Curve USD, but also buy back Curve USD using treasury assets in order to stabilize the peg. And that's what I mean by like the zero coupon bond system, right? Essentially, they could make it so that Curve USD is backed by the trading fees and interest of the entire Curve exchange, which is something that no other, a source of fees that no other system would have access to, right? And given how large of a DEX they are, it's actually pretty substantial, right? They had $20 billion in value in volume, and the number of fees, even if it's 0.1%, that's still a lot of fees because they take 50% of the trading fees on the system for the Curve treasury, basically, right? With redistribution mechanisms that get more complicated as you dive in. But there's just a big pile of money there that no one else have had access to. And if they want to use that to back the stablecoin, then they can generate a system that is backed by more and therefore require less faith and should be more stable in the long run.
That's Chuck Norris's son, by the way, talking there, Logri the Bard.
Nice. So can I ask a quick follow-up question? So I was under the impression that you do also give up some upside as ETH appreciates, similar that you would in a typical LP position, though like I recognize that it's not exactly the same thing.
That's because of the trading fees. So if it just went straight up, of course you're counter trading. So you would be buying the better performing asset as it goes. So as the price goes up, if you had ETH and you're all ETH, then you're just all ETH still, right? There's nothing for it to trade against. If you enter in a mix like an LP, then as it goes up, you're owning more ETH because that's a better performing position. So it's an inverse trade of what the usual Curve system would do. The reason it's generally net positive is because you're actually earning trading fees as your liquidity is used, and that can actually completely, depending on the volatility, right? That can actually overcome the interest that you'd be earning, which is, I think, what you're talking to. Just speculating.
Anybody else?
I'll have to follow up on you. I'd actually love to chat with you more about this.
Yeah.
But yeah, I think their system's really interesting. So great thought.
Yeah,
I think the whole stablecoin space is very interesting. Like everything with LUSD is interesting, and then you see people like MIM that came along, and then they added interest-bearing collateral, and I don't know why DAI didn't follow up on that more aggressively. And then you have people like forks of DAI come out after DAI decided to add the peg stability module and threaten the decentralization of the network in favor of stability. And so you got the rise of Liquidity, and then that had basically an interest-free or 0.5% one-time fee on generating it, which is a different sort of business model, and governance light systems like RAI. I think it's a fascinating space that is one of the true $1 trillion opportunities of this ecosystem. You have like Bitcoin, you have ETH, and then you have some form of stable coin is going to hit $1 trillion inevitably. And the question is, what's the best design? What's the most sustainable? What's the most hardened design? What's the fee optimal design? What's gonna get the adoption for whatever reason that it succeeds? How divided is that pie chart going to be? And I suppose the more divided the pie chart, ironically, Curve is in the best place to capture that ecosystem, right? If you have a lot of successful stablecoins, they're the ones that are providing the hub and spoke model through which the stablecoins are routed. So I don't know how much it's going to be a winner-take-all system. As right now it looks kind of like 1910s like banking in the US, where you had different banknotes that were backed by individual banks rather than the Federal Reserve, right? And that's kind of a historically unstable system, as if Circle was to go away, what would happen with USDC is not necessarily so great, right? It's not backed in the same way. So we're in this kind of nascent area where the stablecoin system is kind of backed by something or other, and it's not backed by the Federal Reserve, which just resembles a historical era of American democracy that I don't know if the world is ready to return to, but we're going to try. There's no stopping this train, right? We're doing it.
Very good.
Yeah, those are good thoughts. I actually think that my current view is that it's possible, or maybe most likely, that we'll have lots of winners, and that having kind of a diversity of stablecoins with varied trade-offs is probably a good thing, as opposed to a winner-take-all.
Yeah, I agree.
But yeah, it'll be interesting to see how it emerges.
Yeah, I mean, if you're going to do experimentation, like you can go fast and break things, but the more options there are, the smaller a break would be, the lower the cost of learning. And we're going through this sort of Cambrian explosion in economic designs in the cryptocurrency ecosystem, and being able to limit catastrophic failures that would cause like actual government intervention is probably a good thing for the entire space.
Excellent. We're going to move on. We got just a couple left here. Bob Rossi has a delegate update. Not sure if this has been posted yet, but the delegate week started yesterday. If you own any DAO tokens, it's a great time to reconsider who you are delegating to, or even better, if you are on the fence about being a delegate, it might be a good time to jump into it. There's more information at the website delegationweek.com, and if you're looking for a list of Ethfinance delegates, check out the Daily Doots page. Daily Doots has a page set up just for all the delegates within the Maverick DAO community. If you own any HOP, now would be a good time to consider delegating, whether that is to someone new or just reaffirming with the person you already delegate to. They are using some of the grant funds to encourage people to redelegate or delegate if they aren't at all. See their forum. Not a huge amount, and I'm not sure if those are final numbers, but at a minimum, it should cover some gas costs and some beer money. So thank you, Bob Rossi. Anybody want to chime in on the delegate update? All right, we'll move on. Let's see. ITUR ad Astra reflects on a famous crypto saying. The quote was, "Crypto wasn't invented to make you rich. It was invented to set you free." So to address the first part of this, crypto wasn't invented to make you rich. I've been in Ethfinance for a few years, and every year I understand this a little more. I joined before the big bull, made some profits, but you don't make life-changing amounts of money by investing spare change as a broke college student, so I obviously didn't sell during the crazy highs. This year is the year in which I'll be calling myself an Ethereum for more than I was calling myself a Bitcoiner. The rest of the quote, "It was invented to set you free." I got to say, I converted to ETH at a good time. Not a good time financially, but at a time where I was disillusioned with Bitcoin. I had heard about Ethereum much earlier, but ignored it, as it was obvious to me that Bitcoiners would not leave the biggest and best coin with zero improvements over multiple years, riding on the first mover advantage alone. what a rabbit hole the Ethereum ecosystem was. What an insane potential of improving the way we interact with wealth and capital, and as a result, the human condition. And then the final part of the quote is, but it will make you rich anyway. If this part ever comes true, I'm ready. But I hope it's not overnight. I don't know if my mental health can take another insane bull, but I suspect that the next one might even be wilder. At least inflation and time have changed my definition of life-changing money. In any case, DCA on, dollar cost average on. So thank you, Iter ad Astra, on that famous crypto saying. I'll say the whole thing again. Crypto wasn't invented to make you rich. It was invented to set you free, but it will make you rich anyway. Yeah. My personal reflection on that is, I think anybody that spends any amount of time actually working with the tools within the Ethereum ecosystem in particular, find out that ETH is particularly very sticky. Like, once you kind of have a little bit of fun doing some of the things in there, that money rarely ever goes all the way back to fiat again. I mean, it's just too much out there. I didn't know if anybody else wanted to chime in on that, but it is funny, like going through like 3 bear markets. It's just you kind of get a little bit numb to it, and the bears get longer than they've ever been before. The bulls are more sporadic than ever. It's just, at the end of the day, for me, it's just there's so much here to stick around for. I just want to watch it all take place. All right, we'll move on. Too nice for all this is trying to explain Ethereum for dummies. Oh boy. I better sit up straight and pay attention. I'm working on a few crypto beginner tutorials with the main goal being to simplify information and for a better learning experience. Ideally, a lot of users don't actually need long explanations of how blockchain and dApps work and just want to know how to use them. Interestingly, I wanted to compare simple transacting as copying and pasting an address. And I thought to compare this to being as easy as copying and pasting an IBAN number for digital banking transactions, like in many EU countries. But then it occurred to me that in the US, peer-to-peer banking transactions are still impossible, which is pathetic. So this reason alone makes explaining this way harder than it should be. That's it. On a side note, that's a really interesting point. Just a funny observation. What could be a better metaphor for explaining transactions in a crypto for dummies kind of way? I was considering using email addresses as a metaphor, but I don't think that's the best way. Also, is a lack of peer-to-peer banking a problem that FedNow is trying to solve? It should be a crime how far behind the U.S. is due to lacking simple digital transactions as a standard feature for all bank accounts. Anyway, people generally understand PayPal and Venmo, but trying to explain crypto transactions automatically sounds way more technical if you're not already familiar with similar concepts. That's a great post. Too nice for all this. Yeah, when you give pause and think about like how hard it is to do peer-to-peer in the United States without, processing a bank-to-bank transfer. The only thing I can think of in my limited world of banking is I have to actually go to the teller and do like a counter check if I don't actually have a checkbook with me. And then it has to be like wired or something. It is so much friction. If you don't want to use an intermediary like Venmo or PayPal or some other method of Meta, Facebook Pay or whatever. Anybody else got any comments on that? All right. Last but least, I am officially green-pilled. I've taken work with Super Modular XYZ and green-pilled via Kevin Owaki. My role currently will be creating video content for a variety of platforms and help spread the work to regenerative crypto economics and human coordination. You can read the rest of what I mentioned on dailydoots.com. But so I'm I'm producing video assets for Kevin Owaki. He's been a friend of mine for quite a while, and he heard I was looking for work, and he's throwing 1 month at me. All right, so I gotta show him that I can green pill the world. He's got a podcast that I want to shill to you, because that dude, when you talk about crypto wasn't there to make you rich, it was there to basically serve you. He's got such an interesting history, and the people on his podcast are just true heavy hitters. And he's doing 2 per week. And a lot of people, he was doing a few of them, and I think Bankless was helping do the editing for him. They may still be helping him do the editing. My job will be to do shorts and clips, but he wants me to do some talking head stuff as well for the channel, for both Green Pilled but also Super Modular. It was pretty cool, because when I went to Denver, for ETH Denver, I took my smoker there and I cooked at his Airbnb for about 100 people. I made 6 pork butts for everybody, and actually met a bunch of the team. So when I reached out and Kevin found out I was available to work, it was a pretty easy introduction to like the rest of the company. They're like, that's the guy that cooked the barbecue in Denver. So I'm super honored to at least get a chance at it and do a little bit of contract work with them and see what we could turn out. It's so within the ethos of the Mavericks and Ethfinance anyway. I mean, I would love to be able to brand some of their stuff on what we do and vice versa, because there might be a good opportunity just with the reach that Kevin Owaki has. I mean, he was the guy that founded Gitcoin, for crying out loud. If we want to, maybe our idea of public goods is just feeding into whatever projects that they've got going on, it might be a nice place to position ourselves. I don't know. That's up to the DAO to discuss and figure out. I see I got a ping in the chat here before we wrap up. Thank you, B-Broad. Yeah, it sounds like a great mix with you and Kevin. Thank you, ETH Raider. Appreciate the kind words. I'm super humbled, and I'm really eager to rock and roll with them. Anybody else have anything they want to chime in on before we do our closer here? All right. I think we are good to go. All right. So Rhett from Gravita Protocol, thank you so much for stopping by and giving us a little bit of your time. And we hope that you could join us in the audience or as a featured guest once again. It looks like you already made a connection with Logri the Bard. He's a pillar of the Ethfinance community, and I know that he'll be a great person for you to connect with. So you came in today to talk about Gravita, and you're leaving with a new friend. How about that?
Yeah, I really appreciate you having me. I love the Mavericks, so I was really glad to be here.
We do it every Friday, 12 Eastern. Feel free to stop by. We always love it when we have color commentators on the camera or in the room. And all the best to you. We're going to go ahead and wrap it up. So if you guys want to stick around after the live stream, we continue the party right here in the hotel lobby on Discord for a bonus hour of popcorn if you just want to shoot the bull with us. It's a fun place to let loose when the parents aren't watching on YouTube. Hi, Mom. On behalf of the Ethfinance and EVMavericks DAO, my name is JT. Cheers and big hugs from Kansas City.